Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, this is Bloomberg Business Week on this Monday, August 8th. Carol Massar, Katie Greifeld joining me on this Monday. Tim Stanovic is off. Coming up, our lawmakers in Washington, especially in the Senate, they were pretty busy over the weekend.
They were. You know, I got this alert on my phone last night, and I was like, really? This is it? They did it. Wow.
It's pretty remarkable. We're going to get into this new legislation that's working its way to the House for a vote on Friday. We'll get to that and an update in just a moment. First up, though, let's get an update on the trading day with Charlie Pellet.
Thank you very much, Carol Massar. Welcome back. We're looking at a choppy back-to-work Monday here. Right now, we have got the Dow holding on to a 41-point gain, up by about 0.1%, but both the S&P and NASDAQ, they are on the minus side right now, looking at an 8-point drop in the S&P, down right now by about 0.2%. NASDAQ is lower as well, down 0.3%, a drop right now of 35 points. 10-year yield, 2.76%. The 2-year yield, 3.21%. Spot gold up $12 the ounce, up 0.7%, $17.88 the ounce on gold, while West Texas Intermediate crude up 2% right now. That is a gain of $1.76 a barrel, $90.80, back above 90 now for West Texas Intermediate crude. Bottom line here, stocks are seesawing, treasuries are jumping, traders anxiously awaiting inflation data later this week for clues about the pace of Federal Reserve rate hikes. Now, as for the overall market backdrop, Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
So, look, I think that we've got an amazing number of cross currents right now between the reporting season, which has turned out better than feared. Investors are taking some comfort in that. We've got the jobs data from last week. We've got Fed watching.
In terms of deal making, lots of them today. Whirlpool buying InSinkErator, Emerson Electric's waste disposal business, in a $3 billion transaction. Right now, Whirlpool is down 1.7%. Emerson is down 0.5%. And Pfizer makes it official. It is buying Global Blood Therapeutics, the maker of a drug for sickle cell disease, in a deal worth $5.4 billion. Pfizer, lower little change, down by about 0.1%. Global Blood up now by 4.4%. So again, recapping, stocks are trading mixed. S&P down 6 points now, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. This is Bloomberg.
The yeas are 50, the nays are 50. The Senate being equally divided, the Vice President votes in the affirmative, and the bill, as amended, is passed.
All right, of course, you can hear the clapping after Vice President Kamala Harris taking that vote, and after a weekend marathon legislative session, the U.S. Senate passing a tax, climate, and energy bill. This is a big piece of the Democratic economic agenda and a big win for them as well. So let's get to it. What does it mean? What does it mean for the midterms? Let's bring in Joe Matthew. He's Bloomberg Washington correspondent, host of Bloomberg Sound On at 5 p.m. Wall Street time right here on Bloomberg Radio. Joe joining us from our Bloomberg 99.1 studio in Washington, D.C. Joe, I almost want to say it's nothing like an August recess deadline to perhaps get the U.S. Congress to get something done legislatively, but I feel like there were a lot of forces at work. As you kind of think about what happened this weekend, what are your big takeaways?
Well, I mean, look, Chuck Schumer called it a long and winding road, and I've been humming Paul McCartney all day today, even though we're not quite done yet. The House votes at the end of this week, but I mean, really, if you stop and think about the evolution, goes back over a year. This is back what we called Build Back Better. This was a $5 trillion something or other idea when it first emerged. Then it was 3, then it was 1.5, then it was child tax credits. There were so many different versions of this, different names, different contents. But yeah, this has been just remarkable, and it had been left for dead, of course, at the end of last year. Left for dead multiple times, even this year when Joe Manchin saw the most recent CPI numbers. So, you know, frankly, it seemed to defy gravity, to be honest with you. The question about whether this helps anyone on the midterms Ask me on Halloween what the price of gas is. That's the best answer I think I have for you.
Well, Joe, you stole my question. That's what I wanted to ask, whether this
You can
has
do it again.
any bearing on the midterm elections, or like you said, is this all about the price of gas and the cost of living right now?
Yeah, inflation it's going to be pretty hard to beat as issue number one. But then again, look at Kansas last week. We saw this abortion vote that blew people out of the water. It defied all expectations. So there are some unquantifiable factors in this midterm election that may or may not mobilize Democrats to hit the polls. For instance, will progressives reward Democrats for the biggest climate spend in history? This bill has that. It also extends Obamacare and keeps several million people from losing their coverage. So, there are different ways to look at this. But the history is still on the side of the Republicans. One of the questions that we've had, if I can get a little bit more geeky, is, is this going to be a washout for Dems, or can they in fact hold the Senate or even gain a seat? That conversation is becoming a lot more real right now. It's likely they will lose the House, but it's not likely, at this point at least, that they lose both.
That is really interesting. I guess what I find also interesting, maybe I just don't understand politics, it's just, it seemed like nothing could get done. What happened on the Republicans? I mean, although Kamala Harris had to really do the deciding vote, but is there a change in tone at all in terms of the Republicans? Okay, or the influence of Donald Trump?
It's really incredible to hear the talking points, Carol. I mean, I don't know what people who don't follow this every day must think. It's called, they called it the Inflation Reduction Act. And every Republican who has spoken around it, including on the Sunday morning shows yesterday, said it'll in fact make inflation worse. So wait a minute. Someone's lying to me here. I mean, to be that far apart on talking points is partly why people hate Washington. It's also why they don't understand what goes on here. And Republicans will try to hang this around the necks of Democrats, saying that, we had inflation. They just spent another $750 billion, even though that's not accurate.
Right.
Rick Scott, the senator from Florida, Republican, yesterday said it should be renamed the War on Seniors Act, even though we're lowering, this bill lowers the price of prescription drugs for those on Medicare.
So just got about 30, 40 seconds here. Mm-hmm. Is this a movement forward for Americans, for citizens?
I'll let others make that determination. But look, there is deficit reduction in here. We were supposed to like that, right? Mm-hmm. There will be lower drug prices. Whether you think that eats into the R&D accounts of major pharma, that has yet to be determined, I guess. Having several million people not lose their health insurance is probably a good thing. Doing it with only one party, though, is pretty tough, and it really reinforces the divisions in this country.
Well, bottom line, I heard somebody, I think, talking with David Weston earlier on Bloomberg TV, talking about this is another $1 trillion that gets essentially pumped into the economy. I mean, right? This is more money that gets pumped in, and so you do wonder what impact that will have on kind of our pricing situation.
Well, just keep in mind, though, it does pay for itself. That we know from the CBO. It raises enough money to cover the programs and to lower the deficit. So this does not, as opposed to, for instance, the tax bill in 2017 we keep hearing about, that was entirely deficit spending. So if this lowers the deficit, the Econ 101 guy in my head would tell me that's good.
Okay, going to leave it there. Joe Matthew, thank you so much. Host of Bloomberg Sound On. Find it at 5 p.m. Wall Street time right here on Bloomberg Radio. Back to world and national news we go. Back to Denise Pellegrini in the Bloomberg Newsroom.
Hey there, Carol. The Biden administration announcing another $1 billion in military aid for Ukraine, and this will be the biggest delivery yet, straight from Defense Department stocks. New York Democrat Senate Majority Leader Chuck Schumer taking a victory lap after passing that Inflation Reduction Act we've been talking about yesterday. What was Schumer's secret weapon, you might wonder, in getting this passed and getting it all together? Here's how he put it with reporters.
When you have to get something done like this in a caucus that is so broad, as I say, from Bernie Sanders to Joe Manchin, you have to listen to members and respect them.
And Schumer also slamming Republicans and Minority Leader Mitch McConnell for refusing to work with Democrats. China extending live-fire military drills they were to have ended Sunday. When asked about it, China's foreign ministry spokesperson accusing the U.S. government of orchestrating Speaker Nancy Pelosi's visit to Taiwan, calling it a reckless move, and claiming the current tension over the Taiwan Strait is single-handedly created by the U.S. And Undersecretary of Defense for Policy Colin Kahl talking about it, He told reporters at the Pentagon U.S. policy on Taiwan hasn't changed.
What's important for us right now is to make sure that Beijing understands that our forces in the region will continue to operate, to fly, to sail wherever international waters allows. That includes the Taiwan Strait.
And Taiwan also saying that China's sanctions won't impact it too much economically. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you so much. Carol Master along with Katie Greifeld. We are live in our Bloomberg Interactive Brokers studio at Bloomberg headquarters in New York City. And this story by our Matt Day caught our attention. And this has to do with Whole Foods Market co-founder John Mackey. Looks like he's getting ready for a second act when he retires from the Amazon-owned grocer next month. He is building a chain of plant-based restaurants and wellness centers that offer fitness and spa services.
This week gleaned from corporate records, they list Mackey, 68, as a partner in Healthy America LLC. It's a startup that raised about $31 million from investors earlier this year, aims to launch a, quote, national network of medical wellness centers and vegetarian restaurants.
Yeah, it's interesting. Like, I, first of all, forgot that he had gone back to Whole Foods to run it. Mm-hmm. He's the CEO of it, and I forgot because he had stepped away from the company in terms of running it day to day, and then had been brought back under Amazon. But it is interesting to see what he is doing. Lifestyle company, the convergence of culinary, healthcare, and wellness. For the first time ever, this was, I guess, a posting, right? Now closed job posting. They are, for the first time ever, bringing together all three under one roof to meaningfully transform the health and well-being of individuals. The posting envisions Healthy America offering both a membership program and a la carte public access to its facilities. And I guess they're calling it Healthy America?
That, I guess it gets the point across. It's based in Austin, Texas, just like Whole Foods. It's staffed by veterans of the high-end grocer. Its chief executive officer is Betsy Foster. She's a longtime exec who left Whole Foods in 2020. And Walter Robb, Whole Foods co-CEO when he departed in 2017, listed alongside Mackey as a partner.
Now, that's interesting because Walter Robb, I've talked to when he was CEO of Whole Foods, and before they were bought out by Amazon, we had done a deep dive into their company, and he, in the meantime, has been investing in kind of the alternative food space. So it sounds like they're all coming together, and it sounds to me like it would be a perfect Bloomberg Business Week segment, so we're going to have to get them on. There's a deep, deep, deep tease. All right, you are listening and watching Bloomberg Business Week. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks struggling to find direction. The Dow back on the plus side. Just a couple of minutes ago, it was trading lower. Up now by 15 points. Little change. That perhaps the key takeaway here. We've got the S&P 500 index down 9. Drop now of 0.2%. The NASDAQ Composite Index down 40 points. A drop there of 0.3%. Investor attention turning to inflation data on Wednesday. Right now, we have got the 10-year yield at 2.76%, the 2-year 3.21%. Stocks, though, retreating as a gloomy forecast from giant chipmaker NVIDIA is weighing on tech shares. NVIDIA down now by 8.5%. Spot gold is up $12 the ounce, up 0.7%, $17.88 the ounce, while West Texas Intermediate crude up 1.7%, $90.56 a barrel. Those meme stocks rallying big time today. Bed Bath & Beyond is surging 37.5%. AMC Entertainment up 11.5%, while GameStop is up by 7.6%. Again, recapping, the Dow trading lower now, just turning lower again, down by 0.5 point. We have got the S&P, NASDAQ both on the minus side. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, thank you so much, Charlie Pellet. And as Carol said earlier, we're really at the tail end of earnings season. And I want to talk about that with Brendan Case. He is a big box retail reporter for Bloomberg News. He joins us on the phone from Dallas. And Brendan, the word stagflation, sometimes I used to tweet about it and I'd get a lot of snarky replies. It used to be sort of a taboo sort of word. But in your latest piece for Bloomberg Business Week, you write that stagflation puts stamps on earnings of U.S. consumer giants. What did we learn this past reporting season?
Yeah, one of the big lessons coming out of the earnings season for consumer goods companies is that a lot of them are starting to report declines in unit volumes. And so their sales typically, in dollar terms are going up fairly moderately. Their prices are going up a lot, but their volumes are going down. And what I think you're starting to see there is just the kind of demand destruction from rising prices, with consumers starting to say, you know what, can't happen anymore. I got to spend more on food and fuel, and I'm just going to have to buy less stuff.
So bottom line, it's the dollar amount of stuff being sold is going up, but that's because of higher prices. But the individual units being sold are going down, which is an indication of consumers backing off. Is that fair?
Yeah, that's fair. And if you take a look at a company like, let's say, Conagra, Kraft Heinz, they don't break it out by product line. But what could be the case, just to take a hypothetical example of a product, is that maybe, a box of mac and cheese mix costs more than it did a year ago by quite a lot. And some customers are saying, I'm going to have to buy a little bit less of that because of the price increase.
And so, Brendan, earnings season is so important, not just because we get the numbers, but we also hear from the executives themselves, the C-suite's sort of voices. And when it comes to stagflation and this dynamic you're describing where, the dollar amount is going up, but, the actual number of units sold is going down, what has the messaging been like?
Well, the messaging so far is not, you don't hear many people hitting the panic button. Let's say that. These are all companies that recorded big gains in sales during the pandemic. People staying at home, buying a lot more stuff, a lot more consumer goods. And in many cases, the last couple of years, the challenge for the companies was just to keep up with demand. Now that you see demand coming down, you're not quite at the point yet where companies are saying this is going to be a huge problem for us, because they can still raise prices. For 20 years, there was almost kind of a taboo against raising prices, and now that's long gone. And a company can pretty easily raise prices right now. And the decline in the unit volumes is not really serious enough yet for companies to start saying, wow, this is going to be a big problem for us. You could start seeing that next year. But for now, they seem pretty content, and investors seem pretty content, accepting that these companies are just going to pull the pricing lever a little bit, even if that means volumes will come down.
It does, though, feel like, Brendan, that it's a tale of two retail sectors, because it does seem at the lower end, and we've seen some of this, and maybe it's not fair to say lower end, but Walmart certainly plays to a certain economic spectrum in our world. Target too, like they have both, cut some of their prices, slash prices, if you would, as you say in your story, for some of their product lines. So that's not every retailer is able to kind of keep raising prices.
Yeah, and you know what? We'll get a little more insight next week, because Walmart and Target will report their full results, sort of at the very tail end of the earnings season. I think what you're seeing with them is that they're very busily raising a lot of prices throughout the store. However, there are some particular areas, Walmart cited apparel, Target cited kitchen appliances and patio furniture, some areas where they have had to be aggressive, a lot more aggressive than they wanted to be in cutting prices. It's hard to figure out exactly how that all nets out. I do think that, probably when it comes to grocery, consumers are paying more than they were, and those companies are able to raise prices more than has been typical in the past. We'll probably learn a little bit more about it next week, but I do think that your characterization is very accurate. Walmart, says that it serves basically a broad cross-section of the U.S. population. I take that to be true, but I do think that their clientele skews a little towards the lower end of the spectrum, and they've been pretty candid about how general merchandise sales especially are really starting to suffer.
And Brendan, talk about sort of the other end of the spectrum, the wealthier customers, because you do write that there's a rare breed of consumers and their unit sales.
That's right. You're seeing some luxury retailers that are doing fine, if not quite well, in many cases. And even you see that, outside of luxury. But if you take a company like Costco, Costco's clientele very definitely skews a little more towards the higher end of the spectrum. They, up until July, had been reporting double-digit gains in comparable sales, excluding gasoline. And so clearly they're, selling a lot of stuff and able to raise prices for it.
Yeah, I was in a Costco parking lot. I did not go in, but it was a little hectic. Hey, Brendan, so, okay, we have a really smart audience, investor audience, who's listening to what you're saying. So I'm trying to figure out, what does this mean for these consumer-based companies potentially going forward, and what does it, if anything, kind of tell us more broadly about the U.S. consumer and the U.S. economy?
Yeah, and I think when you think about it in broad terms, I think what it tells us is that many consumers, certainly at the lower end, but really throughout the entire income spectrum, are starting to notice price increases and starting to take action. They're starting to pull back a little bit. That is probably more and more true the lower that you get on the income scale, where people, just don't have the funds to keep buying the way they did during the pandemic. What it means for the companies, well, that's going to be something that we'll have to see, because that just sort of feeds into the whole debate on what kind of could you get a soft landing? What's going to happen with the economy? Job creation is so robust that if, you could imagine a scenario where price increases start to moderate, and you get a situation where maybe you get stable volumes as opposed to declining volumes with a little less pricing action.
Great story, among the most read on the Bloomberg today. Brendan Case, big box retail reporter at Bloomberg News, on the phone from Dallas. It's also a story you can find in the current issue of Bloomberg Business Week. This is Bloomberg.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Taylor Riggs, Janali Basak, joined now by our colleagues Carol Massa, Katie Greifeld, who's in for Tim Stenovic.
Ladies' Day.
Ladies' Day again, ruling the roost. I'm looking at what's happening across TV, radio, YouTube to dissect what is basically a heavy volume load on the NASDAQ. We're pulling back by 0.3%. It felt as though NVIDIA kind of jolted the market in terms of optimism, shall we say.
Yeah, made us all sit up a little bit straighter and take notice early this morning. As you said, Caroline, NVIDIA coming out, reporting revenue in the second quarter that missed the average analyst estimate. We got that earlier. And NVIDIA pretty much trading near its lows of the session, down more than 8%. As for the whole semiconductor space, that too is definitely a laggard in today's trade. Katie, it's down about 2.4%.
And with that chips weakness, you are seeing broader tech weakness as well. Not to the same degree, but still you're seeing the NASDAQ 100 down about 0.6%, outpacing the S&P 500, for example.
And that's even as you have some heavyweights like Tesla doing their hardest to go in the green as we get, well, some action from Washington's side, a focus on climate, on taxes with a bill. But the S&P 500 currently down by about 0.25%, being dragged lower by those chips we are seeing, and down about 10 points. Look, it's not much, 0.25%, and volumes are pretty muted. But the Dow Jones Industrial Average is also flat. They have been higher a little bit more to the tune of about 0.1%, but now we're only up 7 points on the Dow. We're seeing the NASDAQ lower and the worst performing benchmark today, off by 0.3%, 38 points on the lower side. But as I said, volumes up about 15% versus your usual. Russell 2000 in the green, up 0.7%. You're only outperformer, really, Taylor.
It really is the weight, though, of big tech that drags some of the market down with it. I think what stands out to me is on a sector level, a majority of the sectors actually are in the green, Shanali, with energy, materials, real estate as well as yields come down. But it really is at the bottom of the screen, tech, that's down 1.2%. The market cap weighting in that drags everything down today.
Yeah, I'm going to bring you some of the movers in the big tech indices. You're looking at Atlassian still up on the day as the biggest gainer in the NASDAQ 100. And if you take a look at it over a 9-day period of which it rose, it gained $23 billion in market capitalization. So the gain there is notable. Reata Pharmaceuticals, that is your biggest decliner in the NASDAQ composite. That is reacting to some FDA news. And you have Penn National Gaming, couldn't really tell you what's going on there. They didn't announce today. However, volumes have doubled. Remember, this is a classic meme stock itself, but its earnings did fall in line generally with expectations, at least in terms of their guidance.
Yeah, I think maybe pulled lower at the end of the week amid the concerns around their earnings back then, and then maybe a bit of a reprieve today. But I'm surprised you didn't bring up some of those meme stocks that are doing so well as well over the last 9 days. I'm looking at what is perhaps the focus for the market at large. We anticipate an inflation read come Wednesday. We anticipate what the Federal Reserve does in the eye of a labor market that is still so strong. 75 basis points, well and truly being baked in for the next hike come September, Carol.
Yeah, it's interesting. You know, we've got to think about all the economic data that we're going to get this week and what kind of conflicts there will be among those data points, because I feel like that's what investors face every day, that debate about, are things getting better, are things getting worse, where are we? And one of the guests on Bloomberg earlier addressed that. We're talking about Bruce Richards. He's the CEO of Marathon Asset Management, and he said macro conditions facing the world have never been more confusing. Check it out.
You have earnings up, but CEO confidence is down. You have revenues higher, but margins are compressing. And you have employment stronger, but claims are actually, unemployment claims are rising. And so it's all kind of juxtaposed with this geopolitical backdrop, and it's all very, very complex right now. In fact, for anyone analyzing markets or the macro, it's probably never been more confusing than it is today.
And of course, that's Bruce Richards, the CEO of Marathon Asset Management. But you do wonder, Katie, I mean, we've been trying to take what the CEOs are saying about the outlook, what the Fed has to say, and Fed decisions, and then economic data points. And investors are trying to make sense of it all and look for new trend lines day to day.
And Carol, I know you were off on Friday, but I feel like Friday is the perfect example. We had that huge NFP print. You saw futures just plummet in the pre-market trading. And by the end of the day on Friday, they were pretty much close to flat, at least on the S&P 500. Just speaks to just how uncertain it is, and it all comes back to what is the Fed going to do?
I want to talk about that uncertainty in the Fed. I think one of the more interesting notes I read this morning, Shelley, was from the economics team over at Piper Sandler, and they said A, the level of inflation is high, we know that. But B, second and worse, the volatility around that inflation is the highest that it's also been since the 70s and the 80s. That creates the uncertainty from the Federal Reserve of really every data point matters because we're not sure, given the volatility of those inflation readings, how we're going to go in either direction. That forces them to remain nimble and sort of creating that uncertainty a little bit in the market. So I really do think it's maybe not only about the level, but the uncertainty around those inflationary prints that is creating a lot of the Fed's nimbleness, but how do the markets read that nimbleness?
The nimbleness is so interesting to me as well, because you're looking at investors really diverge here on a couple of things, not just where rates are going, but the impact that will have on markets. And then separately, is this a bull case or a bear case at the end of the day? At what point have we reached the S&P bottom, and are things actually starting to look better from here? Have we peaked, and is it good enough to make investing easier when it comes to equities?
I mean, I really like that a well-paid asset manager is saying it's confusing and making our life a little bit easier, because it is on a day-to-day basis hard to dissect some of these pros and cons. And I think all important for the Wednesday read, also all important for the global read throughout the rest of the week. I want to know what US productivity per worker at the moment is looking like, but we also get the CPI prints from China as soon as tomorrow. You get a Brazil and Argentina, you get a GDP figure coming from the UK. This is going to be a really global narrative as well on the week.
Yeah, we need to think about this globally. What I find interesting is that all the experts, like as you said, to hear the head of a global asset management firm being like, yeah, it's conflicting. There's a great story by our Bloomberg economics team, and they take a look at second quarter CPI forecast for 2023, the wide range, 1.8% to 7.7%. I mean, you could drive many trucks through that. It just is a reminder that we don't know how this all plays out after so much stimulus and how you come out of a pandemic.
It is a great question. We don't know where it comes out, but sort of to take it almost to a political angle, we were talking with Joe Matthew, for example, of course, of Bloomberg News, and he made the point that in thinking about, this tax and climate bill that passed, in terms of the midterms, tell me where gas prices are in October. And it feels like the same thing could be said about markets. That at the end of the day, what's driving the Fed? It's inflation expectation. What's driving inflation expectations? It's the energy markets.
And I thought, Katie, you were just going to say, look, surprise. Actually, things can come, surprises out of Washington, which is just kind of surprises can come from anywhere. All right, guys, we're going to continue this conversation. We'll be back at 4 p.m. Wall Street time, our simulcast coverage on TV, on radio, and YouTube. We call it Beyond the Bell. We're going to count you down to today's Monday's close.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Masser along with Katie Greifeld. Tim Stenovic is off on this Monday. And, I keep looking for definitive trend lines when it comes to inflation. And I think a lot of folks have said it's going to take a while for it to start to come down. And then I do wonder that once it does start to, does that trend line go down rapidly?
Mm-hmm. And yeah, I mean, that gets to what I'm sort of wondering about. And when you think about the shape of inflation, do we plateau for a while? I mean, a 9% handle feels really dramatic.
It feels like we are, right?
Yeah, perhaps we are. I guess we'll know much more in about 2 days' time. But what that trend line looks like, the rate of change, you could say, in these inflation readings. And I mean, when you think about the year-over-year prints, at some point, do base effects kick in? I don't know.
Yeah, it's a really good point. And then, we have to remember that what the Fed does, there's a lag time in terms of its impact on the economy. And it is, I have to say, when the job print, I was on vacation, I did step away, I had family members like, Masser, Carol, did you see?
Yeah.
These are my siblings. Did you see the hot, jobs? And I'm like, what?
And did you?
I did. I went and read it, and I wanted to find out. And I was like, whoa, I couldn't believe how strong
I got to tune in at 2 p.m. hear what Mike McKee has to say.
I didn't tune in to hear what Mike McKee had to say, but I did read the right through. Mm-hmm. But it was so strong. So it was.
And I'm glad you weren't listening, but we were sort of asking the question, was there anything that was bad? You could say the labor force participation rate. Maybe that's something to quibble with. Right. But across the board, man, it was just a knockout.
And this is why those weekly unemployment claims become important, because we'll get it kind of almost in real time, right? What's going on in the labor economy. And maybe we can start to see whether or not there's any kind of rollover. All right, you are listening and watching Bloomberg Business Week. Carol Masser, Katie Greifeld. Right now, we do want to get another update on world and national news. For that, it's over to Denise Pellegrini. Hi, Denise.
Hey, Carol. Thank you. Well, Twilio has been hacked. That's after employees were duped into sharing their passwords. The company, ironically, offers digital authentication solutions. It could be possible to get to Twilio's clients by hacking into Twilio's systems, and indeed, the company now confirming some customer data was exposed. The U.S. and Iran on the clock to decide whether they want to revive their tattered nuclear deal. Bloomberg's Nathan Hager has the latest from Washington.
Negotiators ended more than 15 months of talks in Vienna today with a final draft proposal. 2 European diplomats tell Bloomberg News the deal would require Iran to eliminate its stockpiles of enriched uranium in exchange for economic concessions from the U.S. The officials say EU Foreign Policy Chief Josep Borrell will send a message to Presidents Joe Biden and Ibrahim Raisi of Iran, telling them they now have a few weeks to decide whether or not they want to sign the deal. U.S. Special Envoy Robert Malley and Iran's top negotiator are expected to return to their capitals from Vienna within the next day. In Washington, I'm Nathan Hager, Bloomberg Radio.
Thank you, Nathan. And President Biden says he's concerned about China's military movements around Taiwan over the weekend. And White House Press Secretary Karine Jean-Pierre urging China to reconsider this escalating aggression.
They are provocative, irresponsible, and raise the risk of miscalculation.
And Jean-Pierre there speaking to reporters. And Whole Foods Market co-founder John Mackey planning a second, maybe even healthier act when he retires next month. He's planning to build a chain of plant-based restaurants and wellness centers that offer fitness and spa services. And it looks like Austin-based Health America LLC that he's involved with has already raised more than $30 million for this. Global News, 24 hours a day. Denise Pellegrini, this is Bloomberg.
All right, Denise, thank you so much. Denise Pellegrini with World and National News. All right, you are listening and watching Bloomberg Business Week on this Monday. Carol Massar, Tim Stanovic, my co-host is off, Katie Greifeld in his place. And there's a couple market themes playing out today. We talked about NVIDIA and the chip sector. We've seen tech stocks pulling back overall. And then there's the meme stock frenzy. It is back.
It is back, and it's so weird. I mean, if you look at the likes of Bed Bath & Beyond, it's up 35% at this moment. If you look earlier today, though, it was up even more than that. My SIN screen on the terminal is loading, but it was definitely more than 40%, which is nuts. And that's after a 33% rally on Friday. I know that because I did a hit on Bloomberg TV.
Did you?
The Open, it's a very, serious broadcast. I was trying to explain, why is this happening? And there's no good reason.
Well, and it's funny that you say that because it's one of my gainers for this Monday when we get back with our TV colleagues. It is up, I think, 140% over the past 9 days.
It's nuts.
It's nuts. Well, what does it say? The retail investors, they have some fun in this market, right? And they're back. And I guess as I know some of our right-through said that as the overall market has gone up, they're willing to take on some risk again in comparison with what the valuation is of the name right now.
And I get that. But think about what...
Are you fundamentally based?
I'm trying to be. But at least like during the last meme mania that we lived through, at least we could say, okay, well, there's so much stimulus. The Fed is pumping in trillions of dollars. The government, too, sending out direct checks. You don't have any of that this time around. The Fed is actively and aggressively tightening policy. And you're still seeing the likes of, Bed Bath & Beyond just popping off. AMC, too, really going for it. And Carol, again, I know you were off last week, but AMTD, I think it was this name that none of us had ever heard of, just surging thousands of percent.
Yeah, I mean, I don't know, this is where I feel like it becomes a little bit of a video game or gaming market. You know what's interesting? Bed Bath & Beyond, 42% of the float is shorted.
There you go.
So,
there's maybe a fundamental reason.
Yeah, exactly. All right, folks, you are listening and watching Bloomberg Business Week, and I'm Carol Massar, Katie Greifeld. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are looking at a down day across the board right now with the Dow, the S&P, NASDAQ, all in the red. 43 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
Good afternoon, Charlie. Stocks are trading lower after a gloomy forecast from chipmaker NVIDIA weighed on tech shares. The Dow is off 30 points, S&P lower by 10, with the NASDAQ dropping 25 points. The U.S. 10-year yield is at 2.76%, and small caps are up 5 points. 5 of the 11 main S&P sectors are trading lower, with tech and consumer staples providing the biggest drag, while energy and materials are among the outperformers. NASDAQ biotechs rise 30 points, transports are up 55, semis fall 70, while the VIX is higher by 2%. Leaders in the Dow, Disney, Dow Inc., and Walgreens, while Visa, Verizon are the worst performers. On the earnings front, NVIDIA sank as much as 9.2% after a big miss on quarterly revenue. Tyson Foods fell the most since March 2020 as inflation hit meat sales, and Palantir fell as much as 15% after its annual forecast disappointed investors. In deal news, Pfizer is buying Global Blood for $5.4 billion. Wrapping things up, look for earnings from Take-Two, AIG, and Novavax after the bell. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Charlie?
All right, Bailey Lipschultz, we thank you very much. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK, on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, she is well known to our Bloomberg audiences, also well known in the global investment space. Her investment moves watched and critiqued very, very closely. We're talking about the founder, chief investment officer, and CEO of ARK Investment Management, who joined Katie and the ETF IQ team earlier on Bloomberg TV. Check it out.
2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same. Now, I think the differences are, we see an inverted yield curve, and that, of course, is also a warning sign. I think our point of view is that this is going to be a severe inventory recession, but we didn't have the systemic excesses like we did pre-08-09 in the mortgage market. So it's an inventory recession here. And while most economists are saying, oh, okay, the inverted yield curve points to a recession maybe next year, we believe we'll be coming out of it next year. Now, I think the big question is what's going on in China. I think some of the commodity price decline has to do with China unraveling in some sense from a cyclical point of view. I mean, they've got their foot on the brake in many ways. They're trying to let it off a little bit here and there. But I think that the real estate downturn in China is 30% of their economy, 75% of consumer savings. I think they're not going to be able to control it the way they thought they were.
Kathy, it's Eric here. I asked Twitter for some questions. I got a good one, and I agree. This is a good question. A lot of people have it. If you believe we're in a recession and you believe the Fed is going to go on a sort of hike-raising path, why not go to cash? Why stick into the fund? It's an actively managed ETF. You can do whatever you want, and I guess some people wonder why not have more of a cash reserve.
We are going to be 100% invested in innovation. That's who we are. This is what we're paid to do. This is what we say we are. And we think that innovation is going to be a critical allocation in the years ahead as the world moves rapidly. And it tends to, innovation tends to gain traction during tough times. Innovation solves problems. We have so many problems right now. We've got the supply chain problems, which we're still hearing about. We've got energy and food prices up because of the war, really hurting consumer purchasing power. And so I think better, cheaper, faster, more productive, more efficient, more creative is going to win. That's what innovation is. So we think most asset allocators are short innovation. And I don't mean NASDAQ 100. We don't think that's truly disruptive innovation. We believe that ARC is more the old style NASDAQ than the NASDAQ is today, because that's all we focus on.
And that, of course, was the founder, chief investment officer, and CEO of ARC Investment Management, talking with Katie and the ETF IQ team earlier on Bloomberg TV. What jumped out for you in terms of the overall conversation? Not just a piece. You guys had her on for half an hour, and I highly recommend everybody go to Bloomberg.com and download the entire video.
Probably the piece that I don't think was in that piece. But, the succession question, I really wanted to get to that. I made that very clear in our show chat that was going on at the time, that we have to ask her about this.
Right.
And I mean, to her credit, she said, we've been promoting people, they have thought about it. She didn't name names. But it is interesting, to hear her really stick to her guns. And we know this about Kathy Wood.
She does that.
Especially know this about Kathy Wood, that, she has a very clear lane. It's innovation. She's not going to go to cash. She believes in these companies long term. And, to her credit, even when she's facing very, very rocky performance, which she is this year, again, she's sticking to it.
Yeah, it is pretty interesting because, we have seen various investment professionals, have a mission, and then when things start to get difficult, all of a sudden it changes, and it does sometimes feel like, individuals chasing returns. And she does stick to it, this innovation, disruption. And many would say she was very early on the Tesla call, got a lot of heat for it, and that turned out to be a really great call. Not all of them have played out that well, and she's certainly gotten hit with the downdraft, right, in terms of some of her plays, and returns have not necessarily been there like they were in the first couple of years. But, you do wonder, is this just a matter of timing with some of this innovation?
Yeah. And I mean, especially right now at this specific moment with the Fed really tightening the screws, it's been a painful time for growth stocks. But quickly, it's interesting. Of course, we had Matt, who's a huge car guy, on.
Yeah.
He asked about Tesla, like why Tesla and not some of these legacy car makers, like Ford delivering their Lightnings. They look pretty cool, but she's still bullish Tesla.
Well, and you do wonder, right, Katie, at some point, does she feel like GM and Ford can be a play because they're part of this shift? GM, right, has gotten rid of a lot of the old lines. Like, can that be part of that innovation disruption play?
Yeah, we'll see. She's sticking to it, but she did say she thinks that Tesla is going to make the better EV in the end.
All right. So anyway, check it out. All of that conversation. Kathy Wood, of course, catching up with Katie and Matt and Eric earlier on TV.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. Carol Master along with Katie Greifeld. And Katie, we've had a couple themes. We've talked about the green space, alternative energy. That's been rallying. But we've also talked about the chip sector. That's been having a little bit of a problem today.
Yeah, absolutely. You're seeing, shares of NVIDIA really take a tumble. That's dragging down the likes of AMD as well. Really, the whole chip space seems like that's overshadowing some of the enthusiasm we got this morning.
All right, we're going to dig a little bit deeper into the chip space. We're going to do that with our own Ian King in just a moment. First up, though, back to the markets overall and to Charlie Pellet.
Thank you very much, Ian King. King is the best, by the way. We've got NVIDIA shares down now by roughly 7.5%. Down $14, $175.70 right now on NVIDIA. The Dow higher, barely. S&P, NASDAQ, both lower. Been that kind of a day. Choppy session, seesaw session. We've got stocks really struggling to find direction, but with 28 minutes to go, the S&P lower, little change, down by about 0.2%, down 9 points right now. The Dow Jones Industrial Average higher by 8 points now, also little changed. NASDAQ down 34 for the NASDAQ Composite Index, a drop right now of about 0.3%. That gloomy forecast from NVIDIA certainly weighing on sentiment. In addition to that, we've got traders anxiously awaiting inflation data that comes out Wednesday. They'll be looking for clues about the pace of Federal Reserve rate hikes. Right now, we've got the 10-year yielding 2.76%, the 2-year 3.21%, spot gold up 0.7%, 17.87 the ounce. Bitcoin today surging by 2.7%, 23,903 on Bitcoin, and West Texas Intermediate crude up 1.9%, 90.68 a barrel for West Texas Intermediate crude. While investors continue to weigh the potential hit to demand from an economic slowdown, but Amrita Sen, chief analyst at Energy Aspects Limited in London, is making the case for even higher oil prices.
I'm not expecting to see a sudden increase in prices, but come the winter, particularly after November, 1st of November, the SPR stops. 1st of December, the Russian or European embargo on Russian crude starts as well. You've got the China Party Congress, which should allow, we believe at least, some easing in COVID restrictions. The market is going to tighten up very, very quickly. So we still maintain our forecast of over $120.
And again, she said 120 on Brent. Right now, we do have Brent crude, as I mentioned, pushing higher today. Brent is at 96.49, up by 1.6%. Among some of the oil stocks today, they're all in the green. ExxonMobil, case in point, up 0.8%. BP, the ADRs there, up by 1.8%. Chevron up 0.1%. EOG Resources up 0.7%. And Pioneer Natural up by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, we've been talking about this a lot today. NVIDIA shocking Wall Street with a big miss on quarterly revenue, saying a slowdown in the gaming industry is eroding demand for the high-end graphics cards used in specialty computers. The stock down a lot today, down more than 9% at its lows today. The SOX, the Philly Semi Index, also has been dragged down by about 3% or so. So our go-to on all things related to the semiconductor world is Ian King. He's U.S. semiconductor and networking reporter at Bloomberg News, and he joins us from our San Francisco bureau. You can see him on YouTube. Ian, good to have you here with Katie and myself. First of all, why was this such a shocker?
I think it was more the extent rather than the actual effect. As you'll remember from the Intel kind of disaster call that we had a week or so ago, people were saying, why didn't Intel, pre-report, pre-announce itself if things were so bad? So it's fair to say that there was a reasonable expectation that NVIDIA would struggle with the quarter. But when you're kind of a $7-8 billion a quarter company and you're saying, oh, by the way, revenue is about $1 billion off, that's pretty shocking, and the extent of it, I think, surprised people a little bit, and which is why the stock's down to the extent that it is.
So about $1 billion. Was that all gaming?
Well, the gaming sort of category for NVIDIA is a huge one. It can mean a chip that goes into a high-end PC that you're using to actually play games on. But the other concern is that some of those gaming chips are actually used by the crypto miners. How many, we don't know. The company says it doesn't know. So that the concern here is that, what we're really seeing here as well is kind of a crypto sell-off as well, that a lot of those crypto mining systems are basically being thrown back into the market, and that's adding to a glut.
I feel like every time we get some negative news out of the semi space, Ian, I try to square that with, wait a minute, we keep also saying chips are in everything, and increasingly they are in everything. And I know not every chip company is the same. So I wonder, is this just a little bit of a blip? Is it a blip just coming out of the pandemic? Is it something more significant in terms of what's going on across the semi space and what's going on in our economy?
The simple answer is all of the above. I mean, let's take them, one at a time. In terms of a blip, the industry had told us, it's different now. The world needs way more PCs. We'll have 2-3 PCs in every home. And now what we're seeing is really that's not the case, particularly if you're going to see your heating bills going up by $1,000 come this winter. You're not going to be spending money on a $2,000 PC with an NVIDIA graphics card that costs $1,000. So that's one of the things that we've seen coming out of the pandemic, that really the world doesn't need 2, 3, 4 PCs in a home. Mm-hmm. Part of it is other parts of the industry are doing really well. If you're in automotive, if you're in industrial, if you're in some of these kind of longer term secular growing areas, you're doing okay. So there are a number of things going on here. And of course, the chip industry, as we know, always goes through these boom and bust cycles. It's just the nature of the beast. Timing supply with short-term swings in demand has never been anything that they've done particularly well. They've told us this time is different, and what we're seeing is, well, it kind of isn't.
Yeah, I think I've heard that before. It's never actually that different. But put this in the broader context of what's going on globally, because we had heard from them earlier in May talking about the COVID lockdowns in China. We know there's a war going on in Ukraine. How did all of that factor in?
Yeah, I mean, you make a good point. I mean, one of the great stories for NVIDIA over the last few years, one of the reasons why it's the world's most valuable chip maker is because it's done so well in AI computing and in the data center, created a new business for itself that's done massively well. Part of the problem that NVIDIA had this quarter, when data center wasn't as good as it should have been, obviously up very strongly year on year, but not as good as it should have been relative to expectations, was, guess what? We couldn't get enough supply out of China, coastal China, where we've seen these lockdowns. So that's a continuing story that we're seeing as well. I mean, it's not one thing, it's another. It's like, well, we've got too many chips on one hand and not enough on another. So, a lot still going on, a lot of disruptions that aren't just related to balancing supply and demand.
All right. Well, appreciate you making sense of it once again for us. Ian King, U.S. semiconductor and networking reporter at Bloomberg News, joining us from our San Francisco bureau. Right now, shares of NVIDIA, they're still down about 6.7% off their lows, but nonetheless trading lower. And if I take a look at the Philadelphia Semiconductor Index, it is down almost 2% as well. All right, let's get back to world and national news. For that, back to Denise Pellegrini. Hi, Denise.
Hey there. Well, speaking of supply and demand and shortages, Mexico's president is now ordering beer makers in the north part of the country to stop making beer. And this is because of severe drought. This is because of severe drought in the area that's known for making beer like Dos Equis and also Corona. The Pentagon has announced another U.S. military aid package for Ukraine, totaling $1 billion for weapons. Undersecretary of Defense for Policy Colin Kahl also saying Russia has suffered between 70 and 80,000 killed and wounded since the start of its war on Ukraine and lost a lot of weaponry.
The Russians have probably lost 3,000 or 4,000 armored vehicles in Ukraine, which is a lot. Now, a lot of that is because of the anti-armor systems like Javelin, like the AT-4s, which are in this package, but also, frankly, because of the creativity and ingenuity of the way the Ukrainians have used those systems.
And Kahl with reporters there at the Pentagon. The U.S., meantime, could be getting ready to go after another Russian oligarch. The Justice Department has received a warrant to seize a $90 million private Airbus plane owned by a member of the Russian Duma with alleged ties to organized crime. Andrei Soch's plane is in Kazakhstan right now. And Senate Majority Leader Chuck Schumer taking a victory lap after passing the Inflation Reduction Act. Schumer touting better options for Americans' health care, including more affordable prescription drugs.
For years, people have wanted this done. And also, for years, people have said, why can't you go after the drug companies and reduce the cost of prescription drugs?
Senate Majority Leader Chuck Schumer there. Global News 24 hours a day. I'm Denise Pellegrini, and this is Bloomberg.
Thank you so much, Denise Pellegrini with World and National News. A couple stories on our radar that we wanted to bring to your attention. First up, anything to do with Warren Buffett and Berkshire Hathaway certainly catches our attention. And it looks like Berkshire Hathaway following an age-old strategy, buy the dip, but doing it very cautiously.
Very cautiously. The conglomerate was a net buyer of equities in the quarter that was reporting a $3.8 billion worth of purchases. That's according to results released Saturday. Net seller of equities in the second quarter of last year. So again, buying the dip I don't know, it's been a pretty good month and a half, it feels like.
I was going to say, I'm curious about when they were buying. It does say Berkshire stepped in as the S&P 500 shed 16% in the latest quarter. The company also reported an operating profit of $9.2 billion as the insurance and railroad businesses posted gains. And despite spending a few billion, only making a small dent in its cash pile. I feel like their cash pile is just always there, always omnipresent.
Yeah. They did report about over $100 billion worth of cash at the end of June. That was barely budging from $106 billion at the end of the first quarter. Buffett had told investors earlier this year, we will always have a lot of cash on hand. So buying the dip cautiously with a lot of cash.
So they just reported their second quarter. That's what they did, right?
Right.
So this is why we're finding about all of this. I do wonder, like, at what point did they think? I mean, if you think about the first quarter, right? It just was such a bummer on so many different fronts. So did they go? And it really was July, right, where we started to see things really take off.
Yeah, sort of. It felt like the market was betting on a friendlier Fed, which we did not get, of course.
Right.
But still, definitely risk appetite was on in July. But in the second quarter, it still weren't there yet.
Yeah, exactly. But, I always think about when investors start to see either the end of a rate increasing cycle by the Fed or, especially because there's more conversation about maybe now the Fed starting to, cut rates at some point. When there's some clarity and maybe some understanding, investors start to feel more comfortable.
Constantly seeking clarity. Will we get it?
I like that, constantly seeking clarity. All right, this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. The Dow higher. For now, we've got the S&P, NASDAQ both on the minus side. NVIDIA, stock we were just talking about, certainly weighing on sentiment. NVIDIA shares down now by 6.8%. Stocks failed to hold on to gains. You got to keep in mind that at one point the S&P was up by about 1%. That gloomy forecast from NVIDIA weighing on tech shares. Traders are also awaiting inflation data for clues about the pace of Federal Reserve rate hikes. 10-year right now, 2.76%, 2-year, 3.21%. The S&P down 3 points, lower by 0.1%. The Dow up 0.2%. NASDAQ down now by 0.1%. Spot gold down 0.7%, 17.88 the ounce. And West Texas Intermediate crude up 1.6%, 90.48 a barrel. Big moves today for a lot of those so-called meme stocks. Right now, Bed Bath & Beyond surging 34.7%. AMC Entertainment up by 8.4%. GameStop also up by 8.4%. After the bell, we'll be hearing from Take-Two Entertainment. Its shares down now by 1.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. Sri Lanka's new president, Ranil Wickremesinghe, needs all the help he can get. That's why he should be trying to win over his many critics, not suppress them. The scale of the crisis confronting Sri Lanka is daunting. The country is effectively broke, and months of demonstrations drove the previous president from power in mid-July. Many protesters are no less suspicious of his successor. The new president didn't help his case by immediately ordering the military to clear the main protest site by force. Seeking to crush the opposition is a deeply short-sighted strategy. The new president instead must address protesters' legitimate demands for political reform. Trying to paper over this crisis will only hasten the next one. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN-GO on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
We've got just about 10 and a half minutes left in the Monday trading session. It is time for the Drive to the Close. David Dietz, Managing Principal and Senior Portfolio Strategist at PPAC Private Wealth Management, roughly $9.5 billion in assets under management. He joins us on the phone from Summit, New Jersey. David, nice to have you here with Katie and myself on this Monday. Interesting trade, tech really under some pressure, although I should even say that right now it's just little changed. What's on your mind on this Monday?
Well, Carol, good to be with you and Katie this afternoon. Gee, I still think inflation and the Fed is issue number one. We were looking at, of course, that second quarter in a row of weak GDP growth or negative GDP growth, and some indicators that showed that the economy was slowing. But then, of course, everything changed on Friday when we had the lowest joblessness since 1969 and very strong increases in earnings and so forth, which has put inflation back in the forefront. It doesn't seem to be receding. And that means, what does the Fed do? And now, of course, people are ramping up bets that we'll see another 3/4 point increase in the Fed funds rate come September. One bank is talking about 1%. And so we're in this period where, you still have a very aggressive Fed, and that puts a lot of uncertainty as to where interest rates are going and therefore what valuation should be on stocks.
Mm-hmm. Yeah, and I was going to ask, within that environment, all of that uncertainty and just watching every data point, how do you structure a portfolio around that? Where do you find opportunity right now?
So what we're trying to, on a monthly basis here, rebalance to our longer-term targets. We're not trying to make a short-term bet. Last month, of course, with the big sell-off, following some very strong metrics on inflation. The prior month, we added to equities. Right now, we're pulling back. We're a little cautious here. I mean, we've seen the S&P 500 rise 14% just since mid-June. I think the NASDAQ 100 at one point today was up 20% from that low. So this is a time to probably take some chips off the table. I think all eyes are going to be on Wednesday's inflation report. If that's hotter than expected, expect a pullback, particularly among some of those mega cap tech stocks, and maybe a rotation back into some of those materials energy names which have not participated as much in July.
So you would recommend investors do some selling when it comes to the equity trade right now?
We would take some chips off the table.
Well, that means selling, right?
Yeah, that means selling, rebalance. I mean, we had one of the best months we've seen in many, many years in July, so take advantage of that because these uncertainties are still here. I mean, for example, NVIDIA, which is our largest chip maker, came in with a big warning in terms of expectations, taking down the whole chip sector. That's a major component of tech, which is a major component of the economy. So therefore, I think investors have to be cautious.
It sounds like you need to be a pretty active trader. So when do you, David, I'd get back to, okay, long-term fundamentals. I mean, most of you guys say if you're investing for the long term, so ride out these bumps. Why is now not a time to ride out the bumps? And as you said, take some chips off the table versus if you believe in these long-term strategies, just, kind of hold it.
Yeah, well, I mean, certainly we're looking for excessive swings in terms of sentiment up and down. I think I appreciate what you're saying. We're very long term. We're not talking about selling out an entire portfolio or jumping in with all of our cash. We're just trimming on the edges here to give ourselves just a little bit of dry powder. We have a number of names in, for example, energy, in financial services, even some gold companies that we'd like to build up just a little bit of cash there so we can take advantage of it. If we remain fully invested at all times, how do we take advantage of opportunities? And there will be, we're August and September historically have been tough months, so we'll probably see stock prices lower than they are today at some point over the next 60 days.
And I'm curious, when you're, taking chips off the table, keeping powder dry to maybe seize on some opportunities, are you sitting in cash? I mean, what does the other side of maybe, selling out of the margins of your portfolio look like?
Yeah, so that's a great question. So, typically not cash because it's yielding so little, although that's changed dramatically over the last 12 months. But I think short-term dated fixed income, I mean, we know the headline here is that the 2-year Treasury is yielding substantially more than the 10-year Treasury. So why would you go out to the 10-year if you're taking chips off the table to ultimately redeploy? So depending on the amount of cash you're talking about to make sure the transaction costs aren't excessive, you might be going into the 12-month or 24-month Treasury, waiting things out. We don't want to take a lot of risk in our bond portfolio because we like to be taking that risk in stocks when the opportunities present themselves. We don't want to all of a sudden say, hey, the stock market's down, let's do something, and then have a bunch of junky bonds that are also under pressure for the same reasons.
All right, so the names that you do like, and you kind of referred to them more broadly, I think, before, Capital One, Newmont, Anheuser-Busch, Intel. Is there a common theme among these names?
Dividends. Hey, let's take a look. Let's take a look at Newmont here. It's basically a gold investment. It's the only one. The S&P 500 is down about half from its high. Everyone says gold doesn't pay a dividend. True. Newmont pays close to 5%, and they have almost no debt. I mean, gold's been out of favor for so long. Why? There's been no inflation, and now you have cryptos that take the place of fiat currencies. Guess what? We have inflation. Guess what? Cryptos aren't doing so well. So people could come back to gold and collect that 4.9% dividend while you're waiting. They're diversified over 4 countries. And of course, they also have exposure to other base materials like copper, which could seem to be playing a role in EVs and so forth. So that's one example.
And you said you're not really taking risks in your bond portfolio. We only have about 30 seconds left. But what does that look like? Is that just treasuries?
So first of all, we like to put the fixed income in the tax-sheltered portfolio so that we don't have to deal with lesser-yielding munis. We like taxable munis a lot because they give more yield than tax-exempt ones because you have to pay taxes on them, but if we hold it in the IRAs, no taxes. And so that's a favorite. Agencies, some treasuries. We do own some corporates, but guess what? Stocks are all issued by corporations, so to get enhanced diversification, we take a lighter touch in terms of corporate bonds in our portfolios.
All right, going to leave it on that note. Hey, David, thanks so much. David Dietz, he is Senior Portfolio Strategist at PPAC Private Wealth Management, joining us once again on the phone from Summit, New Jersey. All right, just a few minutes left in today's trading session. Time for Beyond the Bell with our TV colleagues. We're going to count you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Shonali Bassett, counting you down to the closing bell. Here to take us beyond that bell with a global simulcast. Joined by Carol Masser and Katie Greifeld in for Tim Stanovic. We go cross-audience as we do each day, Bloomberg TV, radio, and YouTube audiences, to dissect what has been, well, muted movement, searching for direction, but really some deep movers underneath the benchmarks, Carol.
Yeah, I think that's a really good point. It's like what happened to the earlier rally. It does feel like we are waiting for some indication about what the economic data points, in particular that Wednesday inflation print, tell us about the way forward, especially, Katie, when it comes to Fed policy.
I did find some movement. I'm looking at Bitcoin right now, up almost 3%, about $24,000 a coin. Had to go there. And it is a little bit interesting, I swear to God, because if you look at the NASDAQ 100, it's actually lower on the day. So a little bit of a break apart between Bitcoin and big tech.
Crypto winter's over, Katie. You heard it here first.
It's sunny out here.
A Russell 2000 that's now up more than 1%. A clear divergence between big and small. Don't certainly want to make too much of this on a day-to-day basis, but all of sort of the FX headwinds that we've seen a lot in this quarterly earnings season at least comes to help benefit some of those small cap, more domestically focused stocks. And that is indeed the sort of a big winner on the day too.
Yeah, it's interesting to see the Russell 2000 still up on the day, given that you see inflation expectations cooling. Presumably, that is good for smaller companies. The question is, how long does that win out, and will there be sustained pressure on that part of the market as we see people flock to safe havens here and there?
Is 8.7% cooling enough? It's still high. Still high. Meanwhile, S&P 500 is not on the higher side. As we count you down with the bells ringing across the New York Stock Exchange and the NASDAQ, it is a day where the NASDAQ underperforms and the S&P 500 too, but only by 0.1%. We're off by 5 points in the S&P as they ring the bell. We're currently at 4,140. Volumes were pretty flat on the day there as well. And the NASDAQ off by 0.1%. Now, you had more than 2,000 of the NASDAQ advancing, only 1,200 on the decline, but the declines were big enough, hefty enough, with enough market capitalization that we did drag it lower, and even as volumes were up about 15%. We saw overall the Dow Jones Industrial Average have more advances than decliners, so we managed to pull up about 0.1%, 28 points to the high, but really shining its light is the Russell 2000, Taylor, as you pointed out. And Carol, it is a small cap kind of a day, up more than 1%.
Yeah, that's a pretty significant outperformance. I love that you went inside the NASDAQ. I'm going to go inside the S&P 500 just a little bit. 318 names in the index higher, 183 lower, 2 unchanged. But Taylor, just a reminder that even with the S&P flat, we had a lot of names, the majority of the names in the S&P 500 outperforming today.
And you really see that on the sector level too, Carol. I'm really glad that you brought that up, because look at all the green on the screen for the radio audience. It's auto, it's retail, it's media, up about 0.6% to almost 1% gain on the day. And there's a little bit of some outperformance even in the quote worst performers that are green. But then take a look at what's dragging us down. It's banks, it's software and services, it's semiconductors, it's some of the tech hardware equipment. So all those sort of big tech cap names are everything that's really holding down this market. You're up anywhere from about 0.6% to actually 4.5% on the day.
All right, so 2 major themes that definitely caught my attention in the trade today, and that has to do with the meme stocks and then the alt and green stock energy space, if you will. Let's go to the meme stocks, Bed Bath & Beyond. I mean, we've been talking about, I know you guys, I'm assuming too, that meme stock frenzy definitely back in a big way today. Bed Bath & Beyond just alone up almost 40% in today's session, up 63% at its highs, but nonetheless, some way out performance, up about 140% over the past 9 days. The company's strongest winning streak ever. It is still down about 20% year to date, and we did see some pretty heavy trading volume. I just wanted to check the short side of this. 42% of the float is shorted, so just something to note. Also, because of the Senate moving ahead on climate legislation, of course, big legislation, the Biden economic agenda, if you will, but the green energy space really outperformed. Tesla among them, up 6% at its highs, still just finishing the day with about a slight gain, up about 0.8%, but top of the NASDAQ 100 and the S&P 500. Tesla also striking a deal worth about $5 billion to secure nickel supplies from Indonesia over the next 5 years. Nickel, very key when it comes to battery production, lithium-ion batteries. And then I just wanted to mention Lucid Group. That stock was up almost 4% in today's trade, again, benefiting from that Senate passage over the weekend. So we've seen some really outperformance of these names, Katie.
Well, in addition to memes and sort of the clean tech sort of area of the market, chip weakness, also a big story today. Of course, that all comes back to NVIDIA. We know the story. Quarterly revenue missed by more than $1 billion. The magnitude apparently surprising investors because NVIDIA shares finished over 6% lower. The company said that was due to a slump in gaming, and it's really dragging down the rest of the industry. You're looking at AMD as well, finishing over 2% lower, and the big benchmark level when you look at the Philadelphia SOX index also finishing lower. And I did want to highlight Tyson Foods because we are still in earnings season somehow. Tyson Foods, it's the biggest U.S. meat company. They
Disney
said
on
that,
Wednesday, don't we?
I know.
Okay, sorry.
I know. I'm working my way up there. But in any case, Tyson Foods, it said that inflation is hitting sales of chicken and pork. You have Tyson shares falling by quite a bit today, about 8% or so.
Yeah, and actually we saw perhaps a little bit of rising again in the cattle costs. If we're looking at commodities that go cross-asset for our global audience, the macro movers shines a light on the fact that actually WTI crude did manage to push to the higher side, but it's still only at about $90. Remember, we had the worst week for oil since April, so today maybe a little bit of a bounce higher and more of a story of dollar weakness, but Brent crude up 1.4%, $96 is where we trade. Natural gas, though, pulling back hard, 5.5% lower. That says maybe we see production up a little bit, but also the incredibly hot temperatures in the US just dialing back that little bit. Heat wave may be coming to an end. I'm looking at the foreign exchange market, and actually, as we see perhaps oil push high, you have Canadian dollar, the loonie on the strengthening side, Aussie dollar, Kiwi also strengthening. This is, we see actually some China trade data coming in better than had been anticipated. And I look at a sovereign bond market that is, well, very mixed. We see yields pushing higher over in the Asian trade, but actually here in the UK and in Europe, maybe gilts actually coming down 10 basis points. So money moving into the bond market, Taylor.
You really saw that in full faith and credit back here in the US as well. It was sort of a bond price higher, yield lower kind of day all across the curve. The difference, though, today is instead of a lot of the movement in the front end, a lot of the movement today actually was in the end of the yield curve, sort of the longer end, going out 10, 20, 30, when you think about almost 8, 9 basis points lower here on the day. I want to hit something that's a little bit lower in terms of a full year guidance. Take a look at shares of Novavax, cutting full year revenue to just $2 to $2.3 billion. They had seen estimates of $4 to $5 billion, and the average median of that was about 4.18. So really seeing a cut here to guidance, I think, and Carol, you've been all over this, some of the halting in after hours as well earlier on the stock as we'd awaited some of the news. So really looking at vaccine sales that are slowing down, and indeed now a loss per share as they're reporting in the second quarter of $6.53, well ahead of estimates of earnings per share of about $5.24. So something is going on, not only on the income, but within that sort of margin income statement as well.
You do also wonder how much of it is due to the COVID-19 vaccine that had just started to roll out a few days ago, and you've seen a lot of reports about a sluggish start as a result. Looks like we've got some other earnings. Take-Two is also out.
Yeah, we'll take a look at Take-Two, and as we bring you to Take-Two, we're going to take a look at, again, the after-hours trading of Take-Two. It's down 3% already as the full-year adjusted EPS falls well below estimates, 460 to 485. Estimated was 537, Caroline.
Yeah, let's have a look at what's happening overall with Take-Two. Of course, gaming company adjusted revenue, $1 billion. The estimates were 984, so a slight beat there. We're seeing full-year adjusted revenue at 5.8 to 5.9 billion. That's well ahead of expectations. The adjusted earnings per share coming in a little light, though, and as you just mentioned, the adjusted earnings per share, $4.60 to $4.85 on the year, is sub where the market wanted to see as of $5.37. So as we see sinking significantly after hours, more than 7% lower. Maybe we should have anticipated this. NVIDIA in high exposure to gaming. And of course, in large part, that was an underwhelming earnings statement that we got from NVIDIA, the big chip maker, spilling into what Take-Two is having to say to the market now.
And not a direct one-to-one correlation, Caroline, we've been talking about this, but with Roblox as well, when we think about just some of the gaming sector that's underway, we'll get those quarterly results, I believe, maybe tomorrow. When you think about sort of a sector and maybe a classic reopening trade, if we're all gaming, and not only then the supply of chips, but then the end user and the demand that does or does not come from that, Katie.
Yeah, it definitely seems like the mood music over that entire industry really darkening just in the past few days. Tying that back to what we heard from NVIDIA, for example, today. And Take-Two really taking a bath here, down 7%. It's already down over 29% heading into today's close.
Yeah, and how much of this is as, the world gets out and is traveling and doing other things, and how much of this is just a result of some of that. All right, guys, that's a wrap. That's our cross-platform coverage on radio, TV, and YouTube. Beyond the Bell. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on Bloomberg Radio and also on YouTube. We are waiting Novavax to begin trading in the after hours. Some big disappointment with their revenue numbers. Fiscal year revenue now $2 billion to $2.3 billion. That is a big rethink. It had seen $4 billion to $5 billion. The estimate out there on the street is $4.18 billion.
Yeah, I almost thought that was a typo at first because, man, that is a big, big miss. And then you look at Take-Two Interactive, for example, dropping significantly after hours. That's after their second quarter. EPS fell short of forecast, at least the estimate, about $4.60 to $4.85. The estimate was for $5.37.
And it's interesting because the second quarter adjusted revenue, not such a big revision,
Yeah.
$1.5 to $1.55 billion. The estimate out there is for $1.51 billion. It's that EPS number. So you just wonder why.
Mm-hmm.
Why?
A lot to sort through.
Higher costs? Like, what is that?
That was the case of Tyson Foods. I don't
All
know
right.
if that bleeds over to video games.
Yeah, I don't know either. All right, we'll look for some more clarification. Right now, though, World and National News with Denise Pellegrini. Hey, Denise.
Hey there, Kara. Well, Democrats' hopes for a higher cap on state and local tax deductions. Well, they may be dead for now with that new tax and climate bill passed in the Senate. Bloomberg's Nathan Hager has more from Washington.
House Democrats Josh Gottheimer and Mickey Sherrill of New Jersey and Tom Suozzi of New York have led efforts for months to include an increase to the $10,000 cap on what's known as SALT deductions. They even call themselves the No Salt, No Deal Caucus. But now all three say they will vote for the Inflation Reduction Act when it comes to the House later this week. Gottheimer says his line in the sand is still the same on SALT. He says he'll insist on an increase being included in any future bill that raises taxes. In Washington, I'm Nathan Hager, Bloomberg Radio.
Thank you, Nathan. President Biden in hard-hit Kentucky today after fatal flooding there. Biden says tough to see all the damage.
It's unfortunate. It's my second visit to Kentucky for a crisis.
And Biden also saying he's considering some type of FEMA hotline to help people during these crises. President also telling reporters he's not overly worried about China's military activity around Taiwan. White House Press Secretary Karine Jean-Pierre says they are communicating with allies and partners in the area.
The U.S. and the world do not want to see an escalation here. The United States is prepared for what Beijing chooses to do.
And Jean-Pierre speaking there as China extends military exercises around Taiwan. And Olivia Newton-John has died. The pop singer and iconic star of Grease was 73. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Denise Pellegrini. This is Bloomberg.
All right, Denise, thank you so much. Denise Pellegrini with World and National News. We're watching, we just want to point out, Take-Two did come out with their update earnings, and the stock continuing to trade down about 9% in the after hours. And it looks like it has to do with what the company is talking about, the fiscal year, some disappointment about fiscal year adjusted EPS, second quarter revenue did come in, it looks like a little light as well.
Mm-hmm.
in terms of their numbers. Anyway, stocks trading lower, so we're going to keep an eye on that. We're waiting for Novavax to open up after they put out some disappointing numbers too in terms of revenue. So we'll get to that as soon as we see that trade. In the meantime, watching a story too about Twitter co-founder Jack Dorsey, who tweeted the words, quote, "end the CCP," over the weekend in response to a report about China's strict COVID-19 measures.
Which, of course, is taken to refer to China's Communist Party. Again, like you said, he was quoting a CNN report about the rigorous testing and app-based contact tracing implemented by Beijing. Of course, this was a tweet. There's not a lot of characters there. He did not elaborate on his reasoning, but it comes at a really interesting time, of course, the same week that U.S. House Speaker Nancy Pelosi visited Taiwan, that inflamed relations between the U.S. and China with her presence there. So just a tense time between the U.S. and China, and, you know, obviously Jack Dorsey, a very prolific U.S. billionaire, coming out and tweeting that.
Right. And what's interesting is Chinese officials regularly use Twitter to disseminate their message to the outside world, even though it is banned within their own country. Twitter has battled state-backed misinformation operations linked to China, and in 2020, the company removed more than 170,000 bot accounts for, quote, spreading geopolitical narratives favorable to the Communist Party. I mean, this has been the battle between global social media and China, right? Because there's incredible control, certainly by the Chinese political party and government. So much for freedom of speech. It doesn't exist.
Yeah, at least not in China, and at least not on Twitter.
Jack Dorsey, let us know a little bit more about what you're thinking. Feel free to call in. We're here. All right, you're listening and watching Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. We begin with AIG, a headline from the Bloomberg Professional Service. AIG is deferring its Corebridge Financial IPO. This is AIG reports second quarter adjusted EPS of $1.19. Estimates there for $1.09. Also reporting moments ago, we heard from a video game company Take-Two Interactive. Shares after hours down by roughly 8%. The video game maker sees fiscal year adjusted revenue in the range of $5.8 to $5.9 billion. Estimates had been for $5.42 billion, but we've got the video game maker Take-Two down after hours. And the biotech company Novavax cutting its revenue guidance for the full year. That guidance did miss the average analyst estimate. Shares are halted in Novavax after hours. Turned out to be a down day today for the S&P 500 index. We had the S&P 500 index lower by 5 points. That was a drop of just about 0.1%. Keep in mind the best level of the day, we did have the S&P up by roughly 1%. Dow Industrials up 29 today, higher by 0.1%. The NASDAQ Composite Index down 13, a drop there of 0.1%. 10-year yield 2.74%. The 2-year 3.20%. Spot gold today up 0.8%. 17.88 the ounce, while West Texas Intermediate crude today up 1.5%. 90.36 a barrel. Again, recapping stocks end of the day mixed. The Dow higher, S&P, NASDAQ lower, S&P down by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, last week you might have caught the headline that Global Payments agreed to buy Evo Payments in a nearly $3.4 billion deal, expanding Global Payments' presence in new regions, and that included Poland, Germany, Chile. It also enhanced its scale in existing markets such as the U.S., Canada, Mexico, Spain, Ireland, and the U.K. That was according to a statement that the company put out. So let's talk about the global payment space. Let's bring in Guido Sacchi. He's Senior Executive VP and Chief Information Officer at the publicly held Global Payments. It's a $35 billion market cap payments tech company. The customers include or have included many in the financial space. So we're talking about Discover Financial, American Express, a lot more. Guido joins us on the phone in Atlanta, Georgia. Guido, good to have you here with Katie and myself. How are you?
Very well. Thank you so much, and thanks for having me.
Well, it's great to have you here. A business like yours can see so much and tell us what's going on in terms of the global economy. You guys have a lot of, I think about 25,000 team members, 170 countries around the world that you operate in. Based on the business that you are seeing, what does it tell you about the global economy right now?
Well, the trends that we see are still very solid. And particularly, we see a lot of investment still in technology, especially for the medium and long term. I run technology here at Global Payment, and I'm proud to say that our company's strategy is still predicated on distinctive software, and that seems to still have a lot of traction. So we see still, the consumer being resilient. We still see businesses investing, especially in technology and especially in areas where they can deliver value. Business models obviously need to complement the technology investments, but I think we are well positioned, and we think that we'll weather any storm that might be coming our way.
And Guido, taking sort of a global look, tell us a little bit more about the Evo transaction. How does that expand your scale? What other markets are you looking to enter here?
Sure. Part of our strategy is based on exposure to what we call faster growth markets. And so through the Evo acquisition, we can enter new geographies. For example, attractive markets including Poland, Germany, Chile, and eventually Greece as well. And also gives us incremental scale in geographies where we already have a strong presence, including United States, Canada, Mexico, Spain, Ireland, and the UK. So it's a great complement. And in addition to that, Evo also brings us complementary technology capabilities, especially in the areas of business-to-business payment, which is a strategic area for us where we're expanding very assertively.
And Guido, it's interesting. I feel like the payments space in particular has seen sort of a round of consolidation, especially on the heels of some of the acquisitions that you've made. In addition to Evo, I mean, you also bought a software company, Zago, last year, I believe. I'm curious at this point, are you done? Are you looking at anything else? How much consolidation is there still to come?
Well, I think consolidation is part of the story. The other part of our strategy, especially for acquisitions, is to drive what we call our technology-enabled and software-driven strategy. So we always look at further penetration into integrated and business-to-business payments, as well as distinctive software that we can then bring to market that combine the compelling experiences in certain verticals. Think about healthcare or quick service restaurants and others with embedded payment software that includes acceptance, processing, and settlement of payments. So overall, as a company that focuses on B2B, we help our customers run and grow their business. That's really what we're all about.
So how close are we, in your view, especially in the developed world, to becoming a cashless society? I feel like I rarely carry cash anymore.
Yeah, that's what my wife always says, that I never have more than $20 in my pocket, right? And I always need something for the valet or the occasional cash payment. But really, we see that, coming to a slow end. And it's all good for us. I mean, there is definitely a strong trend in almost any parts of our geographies towards a cashless society, and I think that's going to be accelerated by a number of other trends. I would like to bring crypto into the conversation as well, but we see that as another catalyst, if you will, and also the emergence of other alternative payment methods, such as peer-to-peer payments. Think about the Venmo of the world. So all of that, I think, overall combines into very strong trends towards digital payments that are going to eventually, make cash less and less relevant, to your point.
Guido, just got about 30 seconds left here. You mentioned crypto, and I think we're at this moment right after we saw so much activity that just sent, everything in the crypto space up, and now it's, come down a bunch, and now it seems to be maybe climbing up again. Just in about 15, 20 seconds, I mean, what do you think the role of crypto will be where it's kind of accepted as part of the norm or more of the norm? Just very quickly.
Yeah, I think that we are coming to the end, if you will, of the frothy aspect of crypto, and now we're all focused on actual use cases that can solve real problems. And so we see more and more promising use cases for complicated, for example, transactions or for certain type of payments where crypto can certainly play a role.
All right. Well, you'll have to come back because we would love to continue this conversation in the future. Guido Sacchi, Senior Executive VP, Chief Information Officer at Global Payments.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You are listening and watching Bloomberg Business Week on this Monday. And it looks like shares of Novavax are now trading in the after hours. They're down, it looks like about 34%. So we'll give you a little update on that in just a moment. In the meantime, let's see. Well, maybe Charlie Pellet's already on it.
Indeed. That's what we do here at Bloomberg. Look at Novavax. Trade, as you mentioned, Carol, has resumed. That stock down now after hours by 34.7%. The biotech company cut its revenue guidance for the full year. That guidance missed the average analyst estimate. Shares have been halted, but seconds ago they resumed trading. Right now, again, looking at a drop right now, Novavax down by 34% after hours. Lots of earnings. Take-Two Entertainment down 7%. It reported a fiscal year adjusted EPS forecast that missed the average analyst estimate. We also heard from AIG, the insurer, American International Group, reporting second quarter earnings that demonstrated underwriting strength, even as stock market volatility delayed the initial public offering of its life and retirement business. AIG is deferring that Corbridge financial IPO. Turned out to be a mixed day on Wall Street today. We had the Dow higher, S&P and NASDAQ both retreated today. S&P ended the session down 5 points, down by about 0.2%. The Dow up 29, higher by 0.1%, and NASDAQ was down 13, a drop today of 0.1%. 10-year yield 2.74%. The 2-year yield down at 3.20%. David Dietz is senior portfolio strategist at PPAC Private Wealth Management, and he was our guest right here on Bloomberg Business Week.
I still think inflation and the Fed is issue number one. We were looking at, of course, that second quarter in a row of weak GDP growth or negative GDP growth, and some indicators that showed that the economy was slowing. But then, of course, everything changed on Friday when we had the lowest joblessness since 1969.
Also weighing on sentiment today, NVIDIA. It delivered a forecast for revenue in its fiscal second quarter that fell far below an earlier estimate. NVIDIA today down by just about 6.5%. So again, recapping here, we've got the 10-year 2.74%, the 2-year 3.20%, S&P down 5, a drop of 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, so watching a lot of things on this Monday, and that includes Apple. Just taking a quick check on how that stock closed for the Monday trade, just down a hair, down about 0.3% at 164.87. But a bigger question, Katie, is like, what's up with the lack of deal making?
I know, especially because Apple again came to the bond market last week, issued $5.5 billion worth of bonds. They've got cash out the wazoo, and I mean, at a certain point, why you got to ask, like, why don't they just do something a little bit fun? Why don't they buy something?
All right, so let's put that question to Bloomberg News technology reporter Mark Gurman, who actually is kind of asking that question. He looked into today for a story that you can find on the Bloomberg. He is our go-to on all things Apple, and he joins us on the phone from Los Angeles. Mark, tell us about your thinking and what you were considering when we kind of look at Apple slowing their pace of deal making, because they are a company that are rather acquisitive.
So there's two main factors that I think most people think in their head when they see a big drop-off like this. Why is this happening? One would be government regulation. You've seen what the FTC is doing to Microsoft, NVIDIA, everyone trying to make these big deals. And the other one is COVID, right? And so you go back to 2020, however, the height of the pandemic, that was a record for 6 years for Apple spend on M&A. So you can sort of get rid of COVID, right? FTC stuff, maybe these small deals that Apple will be making in the sub-$100 million range, maybe those won't be getting much FTC scrutiny anyways. Apple doesn't announce, their deals anyways, unless they're probably north of $1 billion or something pretty significant, like they did with this classical music service 2 years ago. So I think you can push both of those to the side, and so there's clearly another reason here, right? I think it has to do with their upcoming AR/VR headset, right? I think they're at a point where they don't want to integrate more technology into the company. They're trying to get this thing out the door, and those are the types of things they would be acquiring anyways, right? They're at a point where they want to just push these latest devices out the door, and then maybe they'll go back to that strong M&A cycle.
Well, Mark, tell us how it used to be, because you have a great chart in this article. And again, you make the point that Apple was never particularly high in terms of M&A activity. But I mean, 2014, for example, stands out, spending close to $4 billion. And you had a couple, $1 billion plus years after that. And then 2021, 2022, as you just said, falls off a cliff.
Yeah, so 2014 was a unique year. That was their biggest deal ever. That was Beats Music and Beats Electronics, right? Then you saw that $1.5 billion year in fiscal 2020. That's when they bought Intel's modem unit, right? Those are the chips that allow you to go on the internet and make phone calls and do other stuff on your phone when you're not connected to Wi-Fi. And then in 2021, you saw that big drop off to $33 million. The only thing they bought that year that we know about is a company called Prime Phonic. That's the classical music service I mentioned. And then thus far this year, about $170 million, right? They've bought in two things that we know about. One company is called AI Music, right? Uses artificial intelligence to create royalty-free music that developers might be able to use in apps and Apple could use elsewhere in the company. The other one is called Credit Kudos. That's a company that allows this company that gives Apple technology to create credit scores or determine credit scores. Very useful, obviously, for their efforts to bring more of their financial infrastructure in-house.
I think what's interesting, too, and as you mentioned before, Mark, is just, that tech increasingly coming under more and more regulatory pressure than before. When you think about that, I mean, what should investors be watching, whether it's Apple, specifically, that might hinder some of their initiatives going forward?
I think it's important to take a step back and think about what acquisitions for Apple have enabled. Siri is one, Touch ID is another, Face ID, Apple Music, the chip technology used across the Apple product portfolio, the technology used to develop multitasking, right? These are all features that came to be because of acquisitions. And acquisitions obviously always give us a look into what Apple is planning. And obviously, it's maybe concerning to investors and analysts and consumers when they're seeing an acquisition slow down, because that really sometimes makes people question, what's the future of the company? What are they cooking up next, right? What's going on in their research and development labs?
And Mark, 30 seconds, but it's not M&A. But what is Apple spending its money on?
That's a good question. Obviously, they're spending it on people, R&D. They're investing a lot in some of these sports-related deals. You saw two deals this year, one with MLB baseball, one with MLS soccer. I'm hoping personally they do an NBA deal as well. So you've seen a lot going on there, and so that obviously is, those are multi-billion-dollar deals in themselves. But of course, that does not fall into the M&A category.
All right. Well, good to know. And I love what you had to say about that. All the things that have been made possible on Apple devices or the Apple world were the result of acquisitions. Mark Gurman, thank you as always. Technology reporter at Bloomberg News, on the phone from Los Angeles. Check him out on Twitter at Mark Gurman. And of course, you can read his stories in their entirety. Just head to Bloomberg.com. That really just stays with me. Like, if you think about these companies, right, what they become and how much of it is through acquisitions. All right, let's get back to world and national news. For that, it's over to Denise Pellegrini. Hi, Denise.
Hey there, Carol. Well, President Biden touring devastation in eastern Kentucky, where floods have killed dozens of victims, and the president noting this is his second time visiting Kentucky in 6 months for a natural crisis, which he says are rising due to climate change.
As you all know, we've suffered a consequence of climate change, a significant number of weather catastrophes around the nation. Just in the year and a half I've been president.
And the president also talking about possibly developing some type of FEMA-style hotline to help people there and elsewhere. China extending those live-fire military drills that were supposed to end yesterday around Taiwan. The foreign ministry spokesperson accusing the U.S. of orchestrating Speaker Nancy Pelosi's visit, calling the move reckless, claiming the tension was created by the U.S. But Undersecretary of Defense for Policy Colin Kahl says China is trying to create a new normal.
We don't support China using its military actions against Taiwan. We don't support Taiwan moving towards independence. Our policy has not changed its support for the status quo. China's policy is what's changed. And clearly what they're trying to do is salami slice their way into a new status quo.
And Kahl speaking there to reporters at the Pentagon. And And superstar singer and actress Olivia Newton-John has died. Of course, she was also the favorite in Sandy opposite John Travolta in the film version of Grease. In the 70s, she was one of the most popular musicians in the world. She struggled with cancer for years. Olivia Newton-John was 73. Global News, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts. I'm Denise Pellegrini. This is Bloomberg.
Thank you so much, Denise Pellegrini. A couple things we just wanted to update you on. Charlie talked about this. Novavax selling off big time in the aftermarket, slashing its full-year revenue outlook in half today after the market close. They did cite a lack of demand for its COVID-19 vaccine from an international initiative to vaccinate lower-income countries and delays in winning expanded authorization in the U.S. There's a bunch of stories about the rollout in the U.S. It's been pretty slow.
Mm-hmm. And if you look at the shares after hours, man, they are down over 32% right now. Also, the EPS, the loss per share, pretty staggering as well. $6.53 loss per share versus a loss per share of $4.75% year over year. The estimate for EPS in terms of loss per share, I believe, was $5.24.
Yeah, and what's interesting is that down 30% in the after hours comes on top of, in the regular trade, they finished down for the year, down 60%. So this is one is going to be really under a lot of pressure probably in tomorrow's trade. All right, little lighter fare. We're getting ready to wrap up. We have one more segment, but we did want to bring you one story that caught our attention. This has to do with Hugh Jackman buying a New York City penthouse for $21.125 million. This coming from the Wall Street Journal.
It's in New York's Chelsea neighborhood. That's according to public records and a person familiar with the transaction. I can't talk.
Yeah,
anyway,
it's Monday.
The records show
happens.
that this unit last traded in 2012 for about $19.4 million. So it's gone up in value. Not keeping up with inflation, though, or maybe it is. I can't do math.
I have to say, I love real estate. I follow it. I love just looking through listings. It's 4,700 square feet, 4 bedrooms. The penthouse has roughly 14-foot high floor-to-ceiling windows, about 3,700 square feet of outdoor space, including a large roof terrace divided into dining and lounging areas. Apartment has views of the Hudson River, as well as the downtown and midtown skylines, according to the listing.
I wouldn't say no. I gotta say, I would not say no to this apartment. It sounds gorgeous.
I would not say no. Is that a yes then?
I think it's a yes. Let me think about it.
All right, you're listening to Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Shares of biotech company Novavax are plunging after hours, down now by 30%. Novavax has cut its revenue guidance for the full year. That guidance missed the average analyst estimate again. Novavax plunging after hours, down now by just about 30%. Also reporting after the closing bell, we heard from the video game maker Take-Two Entertainment. It is slumping by 7%. It missed the average analyst estimate for an EPS forecast for the full year. And AIG reported second quarter earnings that demonstrated underwriting strength, even as stock market volatility delayed the IPO of its life and retirement business. That would be Corebridge Financial. Stocks had a hard time finding direction today, with the S&P giving up a 1% gain, ended lower. The S&P down 5 points today, down by about 0.1%. Dow Industrials did manage to hold on to a gain today. The Dow up 29, higher by about 0.1%. NASDAQ also lower today. NASDAQ down 13, a drop there of 0.1%. 10-year yield 2.74%. The 2-year yield today 3.20%. Spot gold up 0.7%, $17.88 the ounce. So again, recapping a mixed Monday, I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Friday's U.S. labor report showed women driving gains in the month of July, with the number of employed women rising 327,000 last month, accounting for more than half of the 528,000 increase in overall payrolls. The female labor force growing while it shrank for the fourth month for men. So with this in mind, we've got a really great guest coming up. We welcome Peggy Sullivan. She's founder and president of She Can. It's a membership-based, not-for-profit organization where members help one another when it comes to personal and professional development. She joins us on the phone from Palm Beach Gardens, Florida. Peggy, good to have you here on Bloomberg Business Week. First of all, for those who might not know, tell us a little about your organization, how it works, the mission.
Sure, absolutely. Our mission is to help women grow, thrive, and find their vibe. It's just really hard being a woman these days. We wear a lot of roles and responsibilities. And to have an organization that has your back is really, really important, no matter what your needs are. Because let's face it today, you know, women are diverse. We have diversifying needs, and you need some support from every which way direction. And so She Can was founded about 4 years ago to help women really step into their power. And we do that by giving them events, by giving them coaching, by giving them unconditional support. You know, for example, one of our women was a relative in the Buffalo shooting, and it was just such a horrible, tragic thing. But to watch the community get together and to make dinners and start a fund, I mean, women need this. We need a community that has our back unconditionally, and that's what She Can does. We grow, we learn, we thrive, and we vibe.
Thriving and vibing, that's what I'm trying to do. But I am curious, so is She Can, is it mostly focused on the professional aspect of, you know, a women's life, or do you go into the personal as well?
Great question. I'm a firm believer that you really need all three sides of your life to be going well, to really have meaning and enjoyment and true happiness. And what do I mean by those three sides? Well, of course, there's the professional life, but there's also your personal life, your health, your well-being, and your mindset. And She Can really focuses in on those other things, because having one without the other, it just doesn't work. And so we really get the fact that it's a lot more than professional development. It's health, it's wellness, it's a positive mindset, it's your values, getting back to your values.
Well, that's interesting. And I'm curious, you know, in terms of who can be a member, what does it mean to be a member? Who can be a member?
Everybody and anybody can be a member. We are a membership-based organization. The cost to become a membership is really negligent, and we also provide a lot of scholarships. And right now, we are really growing nationally, and a lot of women are tapping into our virtual resources, which has been really fun to watch. You know, people on the West Coast and people on the East Coast, and even people across the country coming together to talk about their challenges and more importantly, how to resolve them.
How big is your membership?
Our membership, we've put a couple thousand people through our programs, and we're growing all the time. Like I said, we're about 3.5 years old, and so so we're growing all the time.
And so tell us, if I'm a new member, what can I expect? What does this this program look like to me?
Sure. Well, I think one thing that really makes us unique from other women's organizations is we do a lot of market research. Every 6 months, we take a step back and we try to really understand what are women's challenges, what are her interests, what does she want to learn and grow more about, what time of day works for her. And we're constantly asking those questions. You know, it's interesting because over the last couple of years, one of the biggest challenges that women across the world has been saying is, I don't have time for what's important to me. And so we develop events, programming, techniques, things to really solve women's problems. Somebody all of a sudden is unemployed and they need help networking. We're there to support them. You know, somebody's having problems with work-life balance. We're there to help them find an idea. Right now, what a lot of women are really grappling with is just their overall level of happiness and the fact that there is just no time for them left at the end of the day. It's all about everybody else. And how do you change that paradigm? And how do you make self-care a priority? And how do you find times for the things that really help you thrive and help you be interested and satisfied and really enjoy what you're doing? So I really didn't answer your question, but I guess what can they look forward to? We offer about 20 events on a monthly basis that focus on all these topics that we research and find out that women need. But in addition to that, we also have chapters in different cities, and we also have annual conferences where we get together and we talk about challenges, but more importantly, solutions. That's what makes She Can really different. Is we're focused on really authenticity and standing up and saying that the challenges we have are real, and let's try to resolve them.
Yeah, I bet there's a lot of women who are listening who are nodding their head and can certainly relate. Peggy, thank you so much. Peggy Sullivan, she's founder and president of She Can, joining us on the phone from Florida. Just want to go back to what will be most likely two of the company stories that we'll be talking about as we go into the Tuesday trade, because in the aftermarket, Novavax shares, they are down just about 32% as we speak in the aftermarket. This, Katie, of course, as they cut their annual sales outlook 50% after a huge quarterly miss, and a lot of it has to do with getting out their vaccine.
And as a result, you are seeing shares of Moderna and BioNTech, for example, also falling after this news from Novavax, again, cutting its annual sales outlook 50%. Just some huge numbers there, Carol.
Yeah, exactly. And we've seen, what the vaccine, the COVID vaccine specifically, has done to companies like a Pfizer, BioNTech, and obviously how it has helped. I can't think of the name. What's been the bigger performer?
I mean, I feel like Moderna.
Moderna, thank you very much.
Moderna really.
This is how much we've gotten away from COVID. But right, it's been such an engine in terms of stock performance, certainly for a long time. But Novavax certainly seeing some disappointment here in the after hours. All right, that's going to do it for the Monday edition of Bloomberg Business Week. Katie, thank you so much. I think you're going to come back
on Friday.
All right,
long time between now and then.
A lot can happen, including the inflation print. Have a good and safe evening, everyone.